What's up, everyone? Major Tom here for International Investing. We got another video coming at you. So we actually created another investment tool last night, and we're going to debut it today. So that investment tool is a macro outlook. It specifically targets the SPY. So I don't know if we can zoom in a little bit on this. Probably be a good idea. Boom, boom, boom. All right. So hopefully you can see this, but here you have the top 40% of what goes into the SPY. Now we could evaluate all the SPY, but it would take a lot of computing power. It would take a lot of algorithms to go out and search and stuff like that. It's going to take up too much power to just search all of the stocks that are in the S&P and reweight them every so often. So what we did was we basically took all the stocks that have like above a 0.5% weighting, and what we're looking at here is their EPS spread. So from their last EPS to their forecasted EPS, how much are they projected to gain or lose in profitability? And we printed the days until the next earnings over here, so we can kind of see when the next earnings are. And we'll notice a trend right here. 4 days till next earnings, 3 days till next earnings, 4 days till next earnings, 2 days, 2 days, 4 days, 5 days, 3 days, 0 days, 4 days, 6 days, 5 days, 5 days, 5 days, 3 days, 2 days. So if you're noticing something here, all the top 25 companies in the S&P 500 are reporting earnings in less than 7 days. For the most part, less than 7 days. That's ridiculous. Basically what I'm saying here is the S&P 500 is geared for a major move, and I'm about to tell you if it's up or down based on our new tool here. And we can see just how good this tool is in a matter of like 7 days or so. So if this is correct, we are anticipating a minus 6.45% downside for SPY, which leaves us at a projected value of $385.60. Okay, so that's the current outlook for SPY, right? And then we'll see this little bearish symbol right here. That's pretty helpful, because if we think that the SPY is going to go down, it can help us influence the way that we kind of time our bets and place our bets, because we can be right about an individual security going up or down, but if we're fighting against the market, it's never really a good position to be in. You're always going to sweat the bet, right? And we don't want to sweat the bet. We always want to be right on our bets. We just want everything to go perfectly easy. We wake up in the morning, everything's green. That's the way that we like things. So coming out with this tool is very helpful. So if we know that the SPY is going to go to 385, let's draw a little line here at 385. Make that yellow. So if we know the SPY is going to come down to 385 here in the next like 7 days or so, which actually makes perfect sense because it's right there where the support is for SPY. And then we'll get all of our forecasts after this set of earnings reports. We'll get our new forecasts for the next 3 months, which will then automatically update the forecast for SPY. So then we can tell if SPY is going to go up, down, trade sideways, whatever, and then we can kind of trade accordingly. But if we look at individual stocks, which is kind of like what we do better in, we've got Peloton still in the #1 spot with 16 days till earnings. NVAX or Novavax 16. Novavax, by the way, has been a real nice printer for value for us. We got in Novavax in the #2 slot at $9.50. We're still in Novavax as a play, and it's down to $8.68. So we've already captured like close to a 10% downside in Novavax already, and very grateful for that. We're going to ride this thing all the way down to like 750 in my mind, which I think is easily doable, even if we have to wait for them to report their horrendous earnings. Peloton, we ran it all the way up to like 1050. It did start to come back and do a little pullback with the overall market. That's okay. If we have to wait for Peloton to release earnings to get our nice little jump back up to the upside, that's fine for me. I'm actually considering doubling down on this position and getting more calls closer to earnings, but we'll talk about that a little later. The other interesting play that I really want to talk about that's going to come into play this week is General Electric. So if we look at General Electric, it is a blue chip stock, right? And look at this. It's hitting all-time highs that it hasn't hit since 2018. It's currently trading at $100 per share. The reason why this is so important is because if we look at the earnings forecast for GE, they kind of had one of those one-off really good earnings events in their last earnings report, and their next earnings is projected to just be 0.14, which is very, very critical to us because if they report an actual earnings below zero, the fundamental value completely shifts for this blue chip stock, and we could see an earnings gap that's similar to the opposite of what happened for GameStop on last earnings. So what I mean by a fundamental value shift is GameStop, for example, was reporting negative EPS, negative EPS, negative EPS, and then right when they reported earnings, their EPS shifted to the positive side, which made their net cash flow go from negative to positive, so which meant they're making cash every 3 months. If General Electric goes from making cash every 3 months, positive cash flow, to negative cash flow and losing cash every 3 months, the value of their all-time high stock is going to go significantly down. And that's something that we're really looking at right now as a hedge fund, is capturing that leg to the downside. Because if we look at the GE pricing, it's totally possible for General Electric to be priced right down here at the $78 to $80 price range. So to see General Electric go from $100 to $80 would be a major leg down, like a major leg down. And we're looking to capture that. So this is one of the only times that I'm going long on options. I'm going long on puts. Normally I would just sell calls because I like theta being on my side. But the problem with selling calls is we are capped in how much value we can make total. So if I was to sell like the 102 call and buy the 105 call, I'm capped on how much max profit I can make. I can only make like $300 probably max. But if I was to buy a put, I have the potential to lose more money, like $358, something like that, $380 total. But on that put contract, I can net up to like 30,000, which is crazy, or like 10,000, something like that, which is crazy. And I think that in this particular scenario where you don't need to buy a lot of theta, the earnings report's coming out in 3 days, and you have such a major gap in EPS to the downside, if you somehow get lucky and they miss this earnings report and they go negative below zero, this stock is going to crumble, and it's going to crumble fast. It's going to be a falling knife. So just wanted to put that out there and really highlight it as probably the key play to look at next week. Again, 3 days till earnings. It's probably going to be on Wednesday that they report. The 26th, is my math right? 25th. 25th they're reporting on after hours, or 26th is when you'll see the major move more than likely. So keep a lookout for that stock. Also, what else is reporting within like a week? Deutsche Bank is a big one that we've been bullish on for a while. It's a pretty big bank. Look, their EPS is gapping up, and they did a major beat last earnings report. I know this banking crisis thing is going on, but it seems to me like Deutsche Bank is positioned perfectly with their portfolio based on their last EPS report. So, and I do consider Deutsche as a big bank. So if you notice, JP Morgan and all the other big banks, they kind of gained EPS because all of those savings deposits at regional banks switched over to the big banks for security. I have a feeling that Deutsche is going to capture some of that same move. And I think we've already started to see it. But I think Deutsche should be positioned up here closer to like $13 a share. Currently trading at 11. There's not a whole lot of money to be made here, and Deutsche Bank isn't the best stock to hold. It kind of doesn't move. But if you just want to sell puts on it, it's a great stock to just sell puts on. Because you can sell puts on Deutsche at like $10, and the odds of Deutsche losing a whole dollar per share, especially when all the sentiment and the EPS and the fundamentals are shifted to the bullish side, I just don't see it dropping below $10 a share. So if you want to sell puts and just collect some free premium, that's probably the best way to play that one. Looking at Roku next. Roku is reporting in 4 days, so that would be next week. If we take a look at Roku, we come up with a pretty stagnant chart. It's been trading between $40 and $40 and $80. Oh wow. And their EPS is going slightly up, but it's still negative 1.48. I don't know if I'm going to touch this one because even though the EPS is trending upwards and so should the price, right? They're still losing a lot of money every 3 months, and they're probably going to have to dilute shares if this trajectory continues. So I don't know if I want to get in at negative 1.48. If they were going from negative 1.48 to like negative 0.5, I would have faith in them breaking the barrier of zero in the next earnings report or two. But because they're not, and because they're still down quite a bit in EPS, I don't know if I want to get in on Roku. I'm looking. We've also got CVS reporting. I do like CVS. We'll pull that one up. I'm actually in a CVS position. I sold puts on this company. And if you look at it, they are going to go for a slight gain on the next earnings report. The price is way, way down for no apparent reason because they've had decent earnings reports. They're well above a 1 EPS. They're going to break the 2 barrier in this report, which is pretty big, pretty huge. If we see CVS go to the upside here, we could see a max move of like $86 per share. Just having it recapture where it was at, or maybe even surpassing it. As you could tell, whenever CVS does have earnings, they do get a little gappy here. So if we take a look at the gap from last one, it went from $84 all the way up to $89. If we see a beat on this report and it goes past the 2 EPS mark, it could be fundamentally huge for the stock. We could see it go from like 73 all the way up to like 87, which would be a pretty nice move, $10 per share. If you were running call contracts on this, you could make like, crazy money if you captured $10 in delta. Not saying that it's going to happen, but it's pretty possible that you capture at least $4 in delta. So, I wouldn't be totally like, 100% confident in a call contract for this one. I am 100% confident in a put contract for GE. I don't know if I'm 100% confident in a call contract for CVS. But selling puts on CVS, I definitely would say is a good play or safe play. If you sell puts below $72, you should be safe. Should be real safe with that. We take a look at BP, British Petroleum. We've got a price spread of 15% on them, and BP is a stock that does not move much, right? So last earnings, they had a price of $34.50. Now they have a price of $39.64. It could be possible that people are flocking to BP for security and safety in their investments because the stock doesn't move much. It would make sense. But just look at the last earnings reports. It's trending down, guys and girls. Like the stock is trending down in EPS. Yet people are still buying it up. Maybe it's for safety. I don't know. But the chart's definitely suspicious. We are up here right against the last major resistance line. I wouldn't be surprised to see BP fall back down and go back to this $33, $34 support, somewhere in that range after this earnings report. That's kind of where I'm looking to trade it to. We are having a pretty significant drop here. Last earnings, they were 1.6. Now they're about to report a 1.4. It's not a major bearish stock, but it's definitely one that you could open a spread on if you wanted to. Let's see if any of these other ones are worth noting. Novavax, that's pretty major. Twilio, we haven't talked about Twilio that much, so we'll take a look at Twilio. I'm actually pretty bullish on this stock. So look at their earnings reports. They majorly beat the last one, which really sent their stock, basically spiraling upwards. If we take a look at this, the stock was kind of trading sideways. And if you notice, right before earnings reports, especially when you're forecasted higher, people will start buying in preemptively. if they think it's going to be a good report. So we saw that here. And then it was a majorly good report because it had a 364% beat. The stock immediately IV crushed up to $78 a share, which was major. It had a sell-off period, and then it spiked back up to $75 as people saw that it was undervalued again. The problem is after the second spike, it sold off again and tried to go for a rally 1, 2, 3 times, failed, and now it's down here at $56 a share. The reason why this is interesting to me is because their next forecast is actually above zero as well. So we had a major sentiment shift on this earnings right here. Now all of a sudden we're back below the zero plane on price, yet our next earnings report is actually projected to be higher right where they beat the last one. So if they have another beat or 2 consecutive beats in a row, and this company shows that they can get closer and closer to that 1 EPS, that's a major positive cash flow milestone. And you could see the price spike back up past this all-time high right here. I wouldn't call it an all-time high, but past the historical high of $80. If we spike past $80 and we break through that resistance, who knows where Twilio goes? You just don't know. And that's one of the things that I'm really looking at as well. We are 17 days till Twilio's earnings call, so I wouldn't recommend going long on options. But if you want to open spreads and just play this safe, that would definitely be a pretty safe thing to do, to sell puts below $57 or sell puts below $55 and just ride this thing out for a month. Collect all the theta, hit that earnings report, watch the price go up. You'll probably either get to close your contract early or close your spread early and just get out of the play, 2 weeks early, not have to wait for that theta decay. Or the earnings report just goes kind of flat, maybe a little slightly above average, and you just see the stock kind of creep its way towards the $64, $68 mark, maybe $70 by the time your contract expires or your spread expires, and you just collect your max profit anyway. That's the way that I see this play going. As it gets closer to earnings, obviously for these 16 days till earnings, 17 days till earnings plays, we'll definitely have to look to see whether or not it's worth buying a call option or a put option. Right now, the only long options I would even consider taking is on GE. So that's kind of my stance on the overall market. If you're looking to get into a SPY spread, I do recommend actually puts on SPY or getting into a spread on SPY where you sell calls at the 415 level. Just to be safe, we'll keep it $3 above the current price, $4 above the current price, the 315, which again is a historical resistance point. So we're looking at historical support and resistance. We're kind of here in that channel right now. If we sell at the 415 and all these earnings drive the price of the S&P 500 down, you're basically going to make out like a bandit on your spread. Also, if you're just going to go long on puts, you don't want to hold a whole lot of theta, especially on an expensive option like the SPY. I know options for SPY can be super expensive when you're buying like 2 weeks of theta, 3 weeks of theta. I would recommend possibly, I can't recommend really anything. This is just an entertainment purpose channel, but at least I'm considering buying like 3 weeks out, 4 weeks out, and just capturing all of these earnings plays. It could definitely be worth your while. 385, if that would be capturing close to $30 in delta, which is very expensive. 30 times 100 would be $3,000. You could definitely turn a few $100 into double-digit thousands with a put like that. So it's definitely enticing. We'll probably look at doing it early in the week if the SPY goes green. If the SPY goes green on Monday and starts pushing towards this resistance line here on the channel for 415, 418, 416, I would definitely look at getting maybe 1 or 2 puts at least just to play into the Apple earnings, which are released May 4th. And the first major earnings you want to look at for the SPY is probably going to be Google. You're going to have Google come out first, which is going to be struggling keeping up with AI, putting a lot of money into research for AI. Then you're going to have Visa, MasterCard, which are probably not going to be doing that great. People defaulting on more and more debt. Then you're going to have Apple report. So you're going to have your fair share of earnings next week. So keep that in mind. Know which ones you're looking out for. Amazon, Microsoft. Know which ones you're looking out for. Know how you're going to play into it. If you're going to go long on options, be very, very careful. Make sure you're paying attention to what earnings are reporting on which date. And as always, happy trading. Hopefully use our tools. They're free on our website. If you like what we do, please leave a like, comment down below. Thanks for watching. Peace.